Hunt, CEO of Syngene International. Welcome to the show, sir. So you've had a wonderful quarter. Congratulations on your results. If you could give us some overview of whether this revenue is expected to continue the same way, the growth rate is expected to continue the same way?
Sure. It was a good quarter. Very, very strong finish to the year. Revenue came up in 31% up year over year. But actually, it was a good year. I think if we look back through the whole of FY23, we upgraded our guidance at the end of the first quarter, and that really continued through the subsequent quarters with some pretty good momentum and nicely balanced. As you know, with our business, it splits neatly into research services and also into development and manufacturing. And we saw good growth momentum on both of those parts of the business and the divisions that sit within them. So discovery services did well, quite an uplift during the year, particularly in chemistry. I think I'd put that down to our largely Western client base, so biotech and pharma companies in the US and in Europe, really trying to catch up on lost ground that they maybe felt they lost during the pandemic, trying to accelerate some programs. So we saw pretty good demand in the marketplace throughout the year. And then on the development manufacturing side, a little bit more strategic in the sense that our manufacturing business took a big step forward during the course of the year with the launch and the uplift of our biologics manufacturing. We have a strategic relationship there with a leading animal health company, and we built through the year, and that led to a very strong fourth quarter. So nicely balanced growth, but also I think some good momentum as we go into FY24.
Just a question on that, on the Zoetis deal, does it have any lumpiness in terms of revenues that have come in, or are we supposed to see this similar growth rate in FY24 and onwards?
Yeah, it's difficult to disaggregate in the sense that we haven't had a full year in FY23 of doing it. It only came in at the back end of the year. I think once we're up and running at steady state, it'll be constant throughout the year.
Okay. So how much is the run rate that you're expecting from the deal? Because somebody said, from what I read, the street says that it's going to be a total 500 million from the deal over a period.
Oh, okay. No, I gave that guidance. It's a 10-year deal, and to try and help the analysts with how to model and think about it, I think about it as a $500 million deal over 10 years. And they won't go far wrong if they model it just by dividing by 10 and putting 50 million or so in each year. Is as close as you can get without actually seeing the precise manufacturing schedule. And of course, outside of the company, that's not possible. But looking at FY24, I think good reasons to be optimistic. There's some nice things going on around the world in terms of demand drivers, and that gave us every reason to give revenue guidance for the year of high teens growth for the year ahead at constant currency. And I think that compares well. If you'd have stripped the currency effect out of FY23, the performance would have been mid to low teens. So that mid to low teens becoming high teens is a sign of growing momentum for the year ahead.
So the street again says that you're going to be extremely aggressive on growth for the coming years. So what exactly is the plan that you've laid out? Also, I see that a lot of investment is going towards the Bangalore and Hyderabad facilities. So what is the amount of investment that we're looking at, and how are we trying to build this up?
Yeah, the playbook for FY24 is very similar to the playbook for FY23. All the same elements I'd expect to be in there. So growth in our research services businesses, growth in development and in manufacturing. And then if we look at where we're investing our capital, it aligns exactly to that strategy. So for the year ahead, the overall CapEx program should be around $100 million. Some of that to spill over. It's work that's already started but has spilled over from FY23. But just where we're applying it, about half of that, 50%, is in research services. That'll be in Bangalore and Mangalore. And then 20% or so is in biologics, in our biologics manufacturing business. 10% would be in development, and then the remainder is just spread across the business in various elements of CapEx.
So what are the plans of scaling up for the coming year?
Well, I think the CapEx tells you that we've got, quite ambitious plans for the
Yes.
year ahead.
So how are we planning to then get more clients on board, or are we expanding with our existing clients? What's the plan?
It's both, and that's actually been the pattern over many, many years at Syngene. What we tend to find, we start off with a customer, often in one area of our research services, and then we follow the molecule. As their program develops through the various stages of research and development, we're a very broad-based organization. We can offer a full range of services. So we're perfectly capable now of going from the very earliest research through to development, through into manufacturing, all the way to their commercialization. Now, in time elapsed in the life sciences industry, that's a decade's journey, and Syngene can partner with them throughout that journey and at every individual point along the way.
So I've been seeing that, you've been coming in at strong EBITDA margins of 32%. So is it safe to believe that the margins will remain at these current levels, or we're even looking at something higher?
Oh, the margin you took there was for the quarter. They do move around quite a lot in our business because of mix effects, timing of various projects. So it's better to step back and just look at the full year. So the guidance for the year ahead is actually for margins to improve marginally, but to be round about 30% at the EBITDA level.
And overall, so if we had to talk about the industry, how do you view the CDMO business? Because that's been on the radar for quite some time as a core pharma growing business. So also, would you be putting in a lot of energy into developing the CDMO business, or will it continue the way it is in terms of services and CDMO?
I think it's both. I mean, remember, Syngene's both a CRO and a CDMO.
Yes.
So we both do the research side and the development and manufacturing. I like the resilience and the balance that you get out of being in both bits of those both of those businesses. And the other advantage is it actually matches the way our clients invest and the way they run their programs. So this follow the molecule strategy, starting at research into development into manufacturing, is exactly how my clients' businesses are constructed. So there's some sense in that. We can partner with them at each point. And as for sort of outlook, I think you can interpret that from the CapEx guidance. 100 million is a step up in the amount of investment that we put into the business, and it's being applied across all elements of our business.
Are we expecting any more long-term contracts in the coming year? We've signed 2, we've managed to extend 1 of them. So
I'm not sure how I could answer that. I mean, the hope, if not the expectation, is that we continue to build those sort of relationships. I've got every reason to be optimistic about it, but I don't have anything to signpost.
Thank you so much, sir. All the best for the next quarter.
Thank you.
And we expect a great growth. Thank you.